Do you want to make money by copying the same trades a professional is taking? Well, now you can. Since 1997, Chris Vermeulen has focused on building technology to help himself become more profitable. He now shares his swing trading and passive investing signal with others just like you. Let these technically proven strategies protect your assets while profiting from the biggest trends, no matter if the market is rising or falling. Visit www.thetechnicaltraders.com to learn more.
Good morning, traders. It's Friday, February 16th. Taking a look at the charts. Actually, quick reminder, I think the U.S. markets, or all the markets, Canada, U.S. are closed on Monday, so it is a long weekend. Anyways, taking a look at the charts, we are seeing money flow into more or less the tech this morning. We got Applied Materials, AMAT, which actually, if we go and take a look at that, we can see that there's a big gap up here on the 10-minute chart. We're seeing a very big move. This is helping move the market, the tech sector higher, probably going to help lift NVIDIA and really all the semiconductors and drive things up. So big move up in AMAT. But if we go and take a look at the SP 500, you can see we got this pink 20-day moving average. The market keeps getting close to it and then bouncing off that level. We are really in striking distance of hitting new all-time highs for the SP 500. We are very close to that. If we take a look at the NASDAQ, it's up about 0.5% this morning. It's in striking distance as well, hitting new all-time highs. So we'll see how this unfolds. Overall, it was only like 2.5 days ago we saw mass panic. The sky was falling. People were dumping shares, betting against the market, huge on a big move down. And here we are, really just a few ticks away, really, from hitting new all-time highs. The market is amazing at trying to get people on the wrong side. Of course, the news, the media is all a big part of that. It sucks your emotions in, gets you thinking, double guessing, second guessing the trends. And typically the market goes up on bad news, which goes against the feeling or how we think. And the market will put in a major bottom when it is nothing but really bad news, where there's just nothing else. Everything is just completely falling apart. Hope is gone. That's when the market actually puts in a bottom. So bad news is usually a good thing for the markets, believe it or not. As they say, it climbs a wall of worry. And the news is nothing but really problems and worries. So that's probably why that is kind of that way. But anyways, let's take a look at the rest of the markets. We've got bonds trading down a little bit today. They've been fizzling out. If we go here, somewhat of a controlled fizzle out. Fed talking about no rush to raise rates, to cut rates. So that is fizzling out there. The dollar has been in that stair-stepping pattern, working its way up, had another big pop, a little bit of a pause and pullback here. Strong move in the dollar has put pressure on gold. We've seen gold, silver, and miners pull back down to some longer-term support levels. If we take a look at silver, it's actually kind of bucked the trend a little bit. It has popped back up into towards the 50-day and into resistance. But when we look at the gold miners, they did play catch up there yesterday. They had kind of a 2-day bounce, negating some of this huge drop where we saw miners fall like 6.5% that one day. So they're still trying to recoup that big wave of panic. We'll see how that unfolds. But overall, the trend is definitely to the downside in the precious metal space still. If we take a look over at crude, down 0.75%. Trying to build maybe a little base here. It's trying to hold its ground and trade under the 150-day and right across these highs. If I draw a line across here, you can see it's a fairly significant level through all of this. We've got highs, we've got lows, we've got a breakdown, major resistance. So we could argue this is potentially a rounding formation. And if it can pop and break, we might actually see energies continue to move up, which if that was to move up, it could increase inflation even more and catch people off guard. And a little bit of inflation numbers or inflation just kind of holding seems to spook everybody. So if we see energy costs go up, that could keep inflation here for a while if we see oil truck higher for several more months. Overall, if we take a look over at, let's take a look at XLP, which we are on here. It has moved higher and then has faded back down. Yesterday had a bit of a bounce off kind of a little bow tie here where the 50 days crossing up through the 200 the 150 day. And price is trading at the 5 and the 20 day. We'll see if this ends up getting some traction here and starting to move higher. But overall, we're just kind of letting this market kind of work itself out. We are continuing to see our positions do very well. We've got SSO, we got in over here. It is up 28%. If we take a look over at our QLD position, it got in, I think it was right here, and it is up 32%. So we continue to just ride the market. We've been shaken out of more or less 5 different sector trades because they're choppy, they're volatile. That's what happens in a stage 3 topping phase. They pop and drop, they're really noisy. Versus the indexes, we're just still riding this wave, this overall strong kind of momentum move. Much cleaner, much easier, and you can actually make quite a bit more money while trading the indexes more or less during this type of phase, just because we're catching the tide. We're just being patient, letting the tide go up. And we benefit from the tide, the overall trend of money still trickling into the market. Doesn't matter what sector it's in. We just want to see money keep trickling into the market. We just ride the tide up. We're not trying to pick specific waves and sectors so much, although with BAN, that is what we do. But as you can see, it does become more difficult to stay in those trades unless you give them huge movement price action to whip around. But really don't want to give them too much of a leash because they can do a lot of damage and crash pretty hard. Other than that, I think that is about it. I think the key here, if we take a look at the overall markets, when we've got an uptrend, when we're in a bullish phase on the weekly chart, we tend to see longer, nice, significant trades. Once the market starts to top and starts to move down and head lower, the market becomes much more choppy, a lot more difficult to have follow through on these trades. And then once we get back into a bullish phase on the longer term chart, we do start to get these longer trades where the bigger money can be made. It's about preserving capital here. And again, the market fell roughly about 24% in 2022. Most people lost their shirts. We ended up, with CGS, we ended up locking in about 5 or 6%, which doesn't seem like much. We actually have people say, well, you're not making much money, but keep in mind, everyone else, the average portfolio went down 24%, and we're up 5%. So it's a 30% difference, which is massive. And people, for some reason, can't seem to put that together. But that is the difference between playing the market trends and knowing how to manage capital through these phases. And of course, this whole phase, and we're still really in a major stage 3 topping phase, in my opinion, even though we're hitting new highs, we're still in a very choppy time, which we have seen in the sectors, which is why sectors at the BAN strategy has been a lot more difficult. You get in, you hit some targets, it rolls over, dies really quick. And unless you want to hold through that and hope they turn around and go back up. But that carries a lot of risk, just holding things and hope that they're going to go higher, because this market could roll over at any point, and those sectors could fall 20, 30, 50% over the next several weeks or months. So that's not something we really want to do. Anyways, that's about it for now. We continue to let this market work itself out, and we'll see if this stock market wants to hit new all-time highs this week or next week, and keep on pushing our positions up. Anyways, talk to you soon. Bye-bye.